Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the top 3 best stocks to buy right now. For more videos and news updates, as well as the best stocks to buy, remember to go and smash that like button right now on this video, subscribe if you are new, comment down below your favorite stock to buy, and without further ado, let's jump right into today's story. So these stocks that we're going to be talking about are not only fantastic growth stocks, and one of them offers a pretty good dividend, but they're also going to help grow your portfolio over time. We're mainly going to focus on the long-term picture of a stock portfolio so we can invest into long-term plays. So these are not companies that you would buy and sell within the first 5 years. You would buy these companies, and regardless of what happens, you would hold these companies for the long term. The main reason for this is that all of these companies are on a fantastic growth trajectory that will show its fruits over the long term, which is greater than 10 years. The good news is that because of difficult times as of late, there is a great buying opportunity to get into each of these stocks. So the difficult market has actually made it a better buying opportunity in already fundamentally solid companies and businesses. On top of that, once the market inevitably rebounds and recovers, the stock prices of these companies will also rebound with it, giving us even greater future growth. So this looks very promising. So right now, let's check out the top 3 best stocks to buy right now, at least this week in my personal opinion. The first one is going to be Walt Disney, ticker symbol DIS, which has had a fantastic history of fantastic growth. The demand seems to be coming back for Disney in regards to their parks, their experiences, as well as their products, and their overall streaming platform has done very well. In total, their business has posted a 73% increase in their revenue for the recently ended fiscal year, and this is absolutely amazing news. On top of that, Disney's streaming services and their streaming platform has added more members, which now total to 57 million for their streaming platform for that fiscal year. However, it's not all rainbows and sunshine because Disney is struggling to keep up with their costs, and the company recently missed their earnings. But this is anticipated because the overall macroeconomic environment is pretty negative and demand is trying to get back to what it once was. But once this recovers, Disney is going to be a phenomenal company to own, and even right now, the company is trading at a huge discount. Currently, the DIS share price is trading at $94.46, when at minimum, the company should be trading at $94, which it is right now, and at maximum it could reach as high as $229 per share. So clearly we are getting this company at a discount. That's not to say that it couldn't fall lower, but over time, clearly it could build itself back up. So why buy Walt Disney right now? Well, I think the biggest catalyst for this company is that they have brought back their longtime old CEO, their chief executive officer, and during his time as CEO, the stock price has actually surged by a total of 400% during his tenure. On top of that, to add more fuel to the flame, you're also getting a good price right now for Disney, because it's currently trading at only 23 times its forward earnings estimates, and that's down from a forward PE ratio of 40 just during the prior year. So clearly the company is scaling, and with their old CEO back in action, we can see that this company will continuously give fantastic growth not only to their investors, but also to the people who love their products. Next up, we have Amazon, which is one of my favorite companies to invest into besides Google, and their ticker symbol is AMZN. If you're not familiar with this company, essentially, they are one of the market leaders in 2 different growth industries, the first one being e-commerce and the second one being cloud computing. They are a leader in both of those industries. On top of that, they also gain a lot of revenues through advertising, and they are taking steps to expand into another space in the stock market, which is healthcare. So this is very interesting. Amazon literally has their fingers in everything, and they're rapidly growing their overall consumer base. Despite rising inflation and supply chain troubles, which have negatively impacted their e-commerce platform as well as their cloud computing platform, the company still seems pretty fundamentally solid, despite in the short term, these problems impacting their earnings negatively. As a result, Amazon has reported declines in their operating income quarter after quarter, and their overall stock has had around a 43% pullback this year. So if we just look at Amazon from a short-term perspective, it looks pretty rough. But again, we're trying to look at the long-term picture here, and investors should remain positive because Amazon is improving its overall cost structure because of this. Recently, they have been cutting costs and expenses, which is going to make them more profitable over the long term, especially as they continuously scale in their cloud computing industry. Right now, the current AMZN share price is $92.36, while professionals believe the company should be worth at minimum $80 and at maximum $232 per share. Like we said, over the past few months, the company has pulled back in their overall share price, but if we look at this company over the long term, this is a fantastic business to have in your portfolio. Today, Amazon is trading at one of its lowest relative valuations in terms of their sales since 2015. So essentially, it's like buying this company years ago, which means we have great growth ahead of us. This also is a great entry point for people who have not entered into Amazon yet, or if people want to lower their average cost basis to continuously invest in Amazon. Because it's a blue chip company, it has great growth ahead of it, and overall, this company is set to succeed over the long term, despite what happens in the short term in the next 1 to 5 years. Lastly, we have another great company named Home Depot, ticker symbol HD. This year, the share price has dropped in Home Depot by around 21%, even though the company has continuously reported gains in both revenue and profit. So this sell-off of their share price is completely unjustified. This is one of the world's largest home improvement retailers, and it's seen momentum in both do-it-yourself consumers as well as their professional consumers. Professional business in particular has grown in the range of double digits. A lot of growth investors like this company because it also offers, on top of good growth, a dividend yield of 2.33, which is very good. Right now, the current share price is trading at $313.64, while analysts believe the company should be trading anywhere between $258 and $470, which it's doing right now. So even if the share price continuously pulls back, this company is still a fantastic buying opportunity according to professionals. In spite of the difficult macroeconomic environment that we are in, individuals as well as businesses are continuously advancing their various projects in which they use Home Depot to supply their various materials. Today, the stock looks relatively cheap because they're only trading at a forward earnings estimate of 20 times, and that's why it seems that Home Depot is a great buying opportunity right now, along with Disney and Amazon. There are other honorable mentions that I would add to this list, such as PayPal, Meta Platforms, Apple, Microsoft, as well as Google, but this video I just wanted to shout out my top 3 that I am buying right now. On top of this, there is also very good financial investments that you should look into, such as Berkshire Hathaway, Morgan Stanley, Charles Schwab, and Bank of America if you want some exposure to the finance space. But other than that, remember to go and smash the like button for more updates on the stocks that I'm buying right now. Subscribe if you are new, and I will see you in the next YT video.